Yep. So it's my thesis that if you're gonna build something like a protocol on top of a decentralized system, right? A blockchain essentially. The more decentralized your protocol on top is, the more valuable it is. Because if it's less decentralized, I mean, it's a spectrum, right? So if it's less decentralized, right, then it means that why not just implement that in a centralized database, right? It you would have provide nearly the same value, but at a cheaper cost for the users. So generally, a good practice has always been, and this is I always try to follow, is that you want a protocol on top of, let's say, Ethereum to be as decentralized as possible. So this is why, okay, it started roughly 2 years, 2.5 years ago, right? I was inspired when I tried making a transaction in Uniswap. At that time, I think it was just Uniswap V1. Yeah, it was just Uniswap V1. And obviously, I've used other financial products before, and the first time I used Uniswap, like I don't have to sign in, I don't have to do KYC, which is a huge hassle, and no, it just works. You just have to connect your wallet, just make a transaction, and it just works. It's so elegant. That was a really eye opener. That is where I decided I want to start something like this. So so after that, it's only after that I tried learning about different protocols. Like at that time, there's Compound, obviously there's Uniswap, what else, and many others as well, like MakerDAO, things like that. I tried to absorb as much as I can, and I decided, okay, there are different kinds of architecture and different levels of decentralization. Apparently, out of all popular DeFi, Uniswap is pretty much close to really decentralized, right? Because of its permissionless nature. I decided, okay, I want to build something, not a DEX, but something that could provide a financial service, but at the same time has the same principles, the same strengths and characterization like Uniswap, essentially that permissionless, decentralized behavior. And that's where Timeswap comes in. Essentially, um, it's a money market protocol as well as an options protocol, apparently. But mainly, it's a money market protocol that is fully decentralized. Its architecture is it's built from the grounds up to be very different from Aave and Compound. If you look at the code, it's so different, but it's more similar to Uniswap, surprisingly. So it has similar principles in architecture as Uniswap, as well as Balancer and Curve, right? Those protocols that have permissionless nature to it. So the three characteristics, just so you guys know, that we're trying to solve here is number one, it's permissionless. Sorry, it's permissionless, meaning literally anyone could create any pair of tokens to lend and borrow whatever token they want with whatever other token they want as collateral. That's number one. So if you look at Aave or Compound, right, it's permission to some level, right? You need to ask permission from a DAO. And very likely they'll reject you, most likely, right? So that's an issue for me. Number two problem that we're trying to solve for Timeswap is generalization, right? This is very close to number one, which is if you want to start a money market, it's really hard to do so, right? Um, Again, like I said, most money market right now can only work with the top 10, 20 tokens because it's designed to be so. It's not generalized enough to work with any token. So Timeswap essentially can handle literally any pair of tokens. Similar to Uniswap, right? And Balancer. Like those DEX AMM can work literally with any pair of tokens and it just works, which is quite elegant. And number three, if you look at the money market right now, like for example from Fuse and, um, and many other protocol that is pretty much like a fork of Compound and Aave, right? The issues with using an oracle, essentially oracle manipulation attacks. It happened, millions of dollars was lost due to oracle manipulation attack. And this is fundamentally due to this fundamental design of oracles. And here's the thing, if you look at Balancer, if you look at Curve, if you look at Uniswap, right? Are they using an oracle to provide what's the correct spot price to their decks? They don't, right? Essentially, instead of using an oracle, to determine what is the correct price, what they do is they discover the price. So in Timeswap, essentially, it solves that problem because in Timeswap, it doesn't use any oracles. It's not reading from Chainlink. It's not reading from Uniswap Oracle. It is self-sufficient. Essentially, it's utilizing arbitrage model to determine what is the correct interest rate and the correct collateral factor. So yeah, that's the three main things that Timeswap is essentially solving. Are you guys following?
Yeah, I'm following, and you've touched on so many key things that we're definitely gonna have to talk a lot more about.
Yeah.
But yeah, I'm following.
Yes, I tried to make it like, just a quick overview of each. Obviously, we can delve deep to each of them one by one if you guys want to, but I'm sure there's a lot of good questions out there. So let's go on. Let's move on.
Awesome. Yeah. I want to encourage everybody, if you have any questions for the TimeSwap team, just drop them in the chat, and we'll make sure they get asked. There was a lot of really interesting things discussed there because this project is incredibly innovative. Um, so yeah, you were mentioning it works without oracles, and it's also permissionless in the sense that you're not like limited to the tokens that are whitelisted by the platform. So there's like a lot of key differentiating factors between something like TimeSwap and something like Aave, Compound, or even like ChiDAO or MakerDAO. Like it's very, very different, very unique. Um, I think maybe like the first thing to address would be like just how the loans work on TimeSwap in comparison to some of these other protocols. Because I know you have, I believe it's called like the three variable AMM, correct?
I think Amit can answer this. I tend to get too technical, so but Amit can really make it simple.
Yeah. Would you like me to explain the AMM? It can get a little technical. I think the easiest way for me to summarize is that like we're all familiar with Uniswap. It uses a constant product function x into y equals to k, which essentially means you have the reserve of assets A and reserve of assets B that is in a contract, and based on the ratio between these two assets, now you have the exchange price that this particular market is currently quoting. So simple equation, x into y equals to k, you use that to exchange two assets. So when we were building Timeswap, essentially you are building a lending borrowing protocol, and lending borrowing is essentially nothing but, let's say, exchanging assets through time, right? So you're essentially lending today to get it back in the future, whereas the borrower is taking it, let's say, swapping it today, and in the future they will, let's say, return it and claim the collateral. So it's essentially like swapping tokens similar to Uniswap but through time. So obviously it is let's say time is a new variable. So when we want to, let's say, add a new variable, we made it quite simple. So instead of, let's say, your Uniswap xy equals to k, we added a third variable, which is x plus y into z equals to k. So I think some people might be like confused. Like in our documentation, it says x into y into z equals to k. So we have been live on Polygon with Timeswap version 1 for the last 6 months. So our version 1 was powered by the x into y into z equals to k AMM. But soon we are going to migrate to an upgraded version of Timeswap, which is the Timeswap version 2, which is coming up in January. And this new AMM is going to be x plus y into z equals to k. So that's a simple, let's say, explanation of what the AMM is. The easiest and simplest description that we always use is Timeswap is like Uniswap, but for lending and borrowing. I hope that helps.
Yeah, that puts it really simply. And then you know, would you say that basically explains how TimeSwap is able to operate without oracles?
Exactly. So in Uniswap, how the price is discovered is based on when traders trade into the pool, right? So when there is buying and selling, the reserve of assets in that smart contract changes, and when the reserves change, the exchange price changes. So it is the action of the traders, the buyers and sellers, that is acting as the oracle instead of, let's say, a chain link or some other oracle service. So very similar here. When lenders and borrowers interact with the protocol, that essentially changes the reserves of assets in the smart contract and essentially changes the ratio, which essentially changes the interest rate and collateral factor. So we don't have to rely on an external oracle to get the price. Instead, based on the ratio between these three variables, we are able to discover, let's say, the information that you would typically get through an oracle. So essentially, the market participants help us discover the price instead of relying on Oracle for the price.
Okay, yeah, that makes lots of sense. And okay, sorry if this is a bit of a tricky question. Um, so
No worries.
as far as I understand, there was like a recent scenario with Aave involving the Curve token, where
Yeah,
I don't know exactly the details of what happened. Was there like a short squeeze or something? But
yeah,
essentially, like someone did some type of Oracle manipulation, and it
yeah,
caused Aave to accrue bad debt. So
yeah.
I'm curious, like, how would that kind of scenario play out if it happened on TimeSwap? Would I don't know.
Yeah. I think like one of the key uh, issues that happened with Aave was that you had an illiquid asset, the Curve token, uh, which had, let's say, a limited amount of supply on chain, which is basically on the, let's say, Ethereum network. There was very little supply of, let's say, the CRV token. And what happened was this user was, let's say, borrowing significantly large amounts of CRV token. So essentially, what they were doing was they were depositing, let's say, a stablecoin like USDC and borrowing, let's say, the CRV token, like some 40 million. Now, obviously, this is slightly different from how you would typically borrow, right? So you would typically deposit something like a Curve token and borrow stablecoin. But what this user did was he deposited USDC and borrowed CRV. So now the dynamics of liquidation changes. Like in the previous case, let's say when you deposit CRV and borrow stablecoin, when the price of CRV goes down, you essentially get uh, liquidated. But here it was the other way around. Essentially, when the price of CRV goes up, this user would essentially get liquidated. And how does Aave do the liquidation? Aave basically has liquidators who will essentially buy, let's say, CRV from the market, sell it, and then basically repay the loan, right? So because of that lack of supply of CRV token in the, let's say, Ethereum network, the price suddenly shot up. So essentially, why this came about was primarily there are like two reasons. One was that you had, let's say, a highly volatile asset that could be borrowed with, let's say, high loan to value using a stable coin. So obviously, that was the first thing that the Aave team remediated. That okay, they changed, let's say, like the LTV for an asset. The second thing was that this token, since it's illiquid, the price, like the price really shot up significantly, and it's that significant run up in price that essentially led to the bad debt. So with TimeSwap, what essentially happens is this LTV that was set manually by the, let's say, the Aave DAO, that essentially becomes free market driven. Essentially, the TimeSwap team or the DAO does not control the LTV slash collateralization. Instead, it is completely market driven. So based on the market demand and supply, this ratios will dynamically change, and hence there is no, let's say, human interference. It becomes nearly impossible to, let's say, manipulate like the way it was manipulated on, let's say, Aave. So I think that's like, I mean, I know it's like a long explanation, but the short answer is that in our case, we don't manage the risk. The risk is, let's say, managed by the market and the market participants. Whereas on Aave, the risk was being centrally managed through the DAO. So obviously, there are potential for errors where, let's say, like, I mean, I mean, I don't want to get into details, but there are errors that could be made with centralized risk management, and essentially what happened there. Whereas on TimeSwap, it's completely market driven, and the market itself, let's say, is designed in such a way that when somebody tries to initiate an attack, it leads to a high cost to them. So it's like shooting yourselves in the foot. So I think that's the simplest explanation. When you try to attack using TimeSwap, you end up paying a high cost, and you're essentially shooting yourself in the foot because like the we don't use any external oracle. Instead, everything is discovered by the AMM itself. So it's a long-winded answer, but I hope I was able to explain.
Yeah, that makes a lot of sense. And I'm curious, would there like would your AMM potentially open up like arbitrage opportunities, or am I not thinking
Yeah.
about it correct? It would. Okay,
No,
cool.
no, that's absolutely correct. I think arbitrage is the way that our protocol will, let's say, balance the prices between other markets. So, let's say there is sudden demand for, let's say, some asset on TimeSwap. So, as more borrowing increases, the interest rate and collateral factor will, start rising up, which will essentially incentivize new lenders to come and lend into the pool. So, this new lenders will further push down the rates and collateralization. So it will naturally arrive at a market equilibrium based on the demand and supply.
Wow, that's incredible.
Yep.
So I'm curious, if you could like walk us, like say I have like $10,000 and I wanna get a loan on TimeSwap. Could you like walk us through like what that would look like? Um,
Yeah, absolutely. I think uh, let's assume that $10,000 is in some asset like let's say Matic. So currently, if you go to our version one product on Polygon, which is app.timeswap.io, you will see a pool for Lido Stake Matic versus Chidao's My Stablecoin. So uh, we have deliberately chosen the Lido Stake Matic because it is an asset that's already earning yield for you, and now you can use that asset which is earning yield to leverage up. So how this would work is, let's say a user has, let's say, Lido Stake Matic in his wallet. They come to the TimeSwap app, connect your wallet, and you select the relevant pool, select the maturity of the pool that matches with your requirement, and you just have to essentially enter the amount that you want to borrow based on the current, let's say, interest rate and collateral factor. The app will show you, okay, for this size of transaction, you have to pay, let's say, X% APR and let's say Y% collateralization. And you can just simply hit click approve, and you are getting that stable coin now in your wallet. So it's a very straightforward process, no complications. There is obviously customizations available if a user is, let's say, a pro, like a professional, or somebody who understands risk much better. There is a slight customization where you can actually increase or reduce the amount of APR by locking in higher collateral. Essentially, what that means is the app will quote you, let's say, X%, but you can actually reduce that X interest rate further down if you commit to lock higher collateral. So it's an interesting mechanism that we have introduced, which is currently not there in the market, where essentially people can get lower interest rate by locking higher collateral, which obviously is facilitated by the AMM being working the way it works. So yeah, it's a pretty straightforward process. I'd love for some of you to go and try out the app.
Perfect, perfect. Yeah, you guys have introduced so many cool things. This is so fascinating. Um, okay, I have a lot of good questions to get to. I really hope we have time for all of them. And yeah, if anyone else has any questions, make sure to drop them in the chat because I want to make sure your questions get asked too, of course. One thing that I think is really important, and everyone always wants me to ask this question, is when token. So like, do you guys have your own token or any plans for a token? Why or why not?
Yeah, right now we don't have a token. Right now, our primary focus is getting the version 2 product out. So I think for us, it's been a pretty interesting journey. I think, like you said earlier in the call, we started building together like in August, September 2020. So that was actually even before this current bull market. So we have actually gone through an entire bull market like without launching a token for like a really innovative product. I think one of the key reasons for that was that I think when we looked at the token landscape, especially for the DeFi applications over the last year and a half, it's not been great. I mean, obviously there are reasons attached to it. I think there was a lot of high inflation, there was a lot of mercenary liquidity farming. So I think incentives were probably not aligned, which probably led to that outcome. So we made a conscious choice that we don't want to launch the token without having some form of product market fit, and with a product that we are confident now we can scale up the product. So it was a conscious choice that we will launch a token only let's say after some form of product market fit. So as of now, our focus, like I said, is on this version 2 product. It's mostly going to be live on Polygon mainnet sometime in January. We just completed the audit like earlier this week, and currently we have just started the private community testnet. I mean, we are definitely offering some for the Polygon community as well. So the details we'll share towards the end of this call, where you guys can also get access to this private beta community testnet. Now, so the plan is that we launch the product V2 sometime, hopefully in January 23, and we get the product to work safely and securely for a few weeks or maybe a month or so. And then once we are confident this thing is safe and sound, we will potentially explore, let's say, maybe a token launch, ideally to scale up the product and acquire new users and capital. So the version 2 is the outcome of, let's say, 2 years of like hard work and research and talking to users, understanding user behavior, feedback, etc. So like our version 1 took like about 18 months, but the version 2 came about in 6 months because the learnings were compounding like very fast in the last 6 to 8 months, and we got some excellent feedback with our version 1, and we've basically improved all of those pain points in V1 and like made the V2 in its current state. So yeah, we are very confident with version 2 going into the market, and we already have quite a few partnerships with a lot of interesting projects. So yeah, as of now, Event Token, hopefully sometime in 2023, hopefully the market gets better, and also hopefully we are able to like launch the product and everything goes well, then it should happen sometime in 2023.
Awesome, awesome. Thank you for sharing that alpha. And like while we're on the subject of V2 and the roadmap, is there anything else that you want to share, cover?
I think on the roadmap front, I think the Q1 I just described is primarily focusing on getting this version 2 out and scaling up the, let's say, the users, the liquidity, and partnerships. We already have quite a few interesting ideas that we are working on for the version 3 of the product. I think one no-brainer that we are definitely going to be working towards is implementing concentrated liquidity similar to Uniswap V3. So essentially, we'll be bringing that concentrated liquidity to improve capital efficiency of our pools. Hopefully, with version 3, there are a couple more interesting designs that we are currently researching where you could have native liquidation without an oracle. So that is something that previously was not possible. Even with Timeswap V1, there is no liquidation, but we have, I think, reached some progress in terms of designing a mechanism where you can now have a situation where there is a liquidation that can be initiated by the lenders for borrowers who are, let's say, underwater. But this is not some external liquidation. This is basically pool participants can liquidate another participant who's underwater. So it's an interesting game theoretic mechanic which we are working on. So I would say these two are from a research perspective, our primary focus over the next 6 to 9 months. And we're also looking at ways to build, let's say, vaults, which will, let's say, simplify the process for a lot of, let's say, retail and regular users, where they can just earn yield and leave the, let's say, the complex things to like maybe a professional, let's say, manager, or let's say maybe some market maker. So I would say these three are our primary focus from a tech and research and product perspective for the next 6 to 12 months.
Wow, that's incredible. Thank you for sharing all of that with us. I'm very grateful. You also mentioned that Timeswap has a lot of awesome partnerships. I'm wondering if you want to discuss any of them.
Yep, I think I can take this. So, as Amit mentioned, right? So, Timeswap pools, since they are permissionless and oracleless, now essentially Timeswap can give the powerful use case to all the communities out there to create their money markets with the native tokens. So, we are speaking to a lot of projects who are essentially interested to create their money markets with the native tokens once the version 2 is going live. So we've got close to 17 18 projects confirmed as partners. So once the v2 is live, you will be able to see these projects and these communities essentially creating their money markets. We are not just speaking to projects on Polygon, we are also speaking to projects on other chains like Arbitrum, Optimism, and Ethereum mainnet. So the interest from other projects on the other chains is also immense. So this is one of the, I think, powerful use case which Timeswap offers. So we have about 18 partners already logged in for creating the money markets. Second interesting use case is that since Timeswap at the base of it is a primitive, right? So essentially now using Timeswap, you can create very powerful, useful products on top of it, which could be structured products. You can create options marketplaces. You can create fixed income products. You can create continuous protocols. So using Timeswap, now essentially any interested projects can create all of these useful features. And so we are speaking to different projects who are interested to explore Timeswap liquidity to build options and structure product on top of it. So we have 2 to 3 projects who are already exploring Timeswap. And the third interesting thing is that using Timeswap now the projects can essentially raise debt, which means that now the projects out there don't have to sell their native tokens from their treasury to meet their expenses. Now you can just lock your native tokens as collateral and borrow stable coins on any other asset that you want to borrow against your tokens without selling it. So we also have interest from projects who essentially, once the v2 pools are live, to create the pools to raise their debts also. So yeah, I mean, on the partnership side, there are immense use cases and other immense various ways how you can use Timeswap.
Yeah, that's incredible. Yeah, I love the composability of DeFi and seeing projects build on top of each other, like the symbioticness. Yeah, it's fun to speculate and think about what all the potential projects might be that build on top of Timeswap. I'm a really big fan personally of like no loss saving platforms. So, but anyways, I digress. I was curious, how do you guys generate revenue? Does Timeswap generate revenue right now?
Yep. So essentially on Timeswap, whenever lenders and borrowers do any transaction, we charge a transaction fees. So a portion of that transaction fees essentially is charged as a protocol fees, which goes to the DAO treasury. So yes, so Timeswap generates revenue through transaction fees.
Awesome. And then another thing that we already talked about quite a bit, like when we were discussing, like Oracle manipulation, with security. I was curious if you wanted to go a little bit more in depth on the security of the protocol. I believe you mentioned you've had some audits done. Do you have any like bounty programs? I don't know. Why don't you let's talk a bit about the importance of having a very safe and secure protocol, I guess.
All right, I'll have this. I tend to talk about security a lot, even though it's not something people market, right? So you don't see this in marketing. Okay, so um, the Oracle problem. Now, the issue with oracles, essentially, let's say if you have a protocol that uses an oracle, you're essentially like trying to balance a spherical rock on top of a mountain. It is fundamentally unstable because there's so much um, economic incentives to try to unbalance it. Essentially, you're inviting a lot of arbitrageurs to find ways to unbalance that oracle, take advantage of that arbitrage difference price between the protocol using the oracle and the oracle, right? So the traditional way of oracle manipulation attack, and I'm talking
Uh,
here the
Dixon,
simplest.
Dixon, sorry to jump in. I think the question was more regarding the security of audits and bounties. I know you're explaining the Oracle
Oh,
security. The question was like audits and like bounties that we have.
oh, is that what we're talking about? My bad, my bad.
Yeah, no problem. I think you can continue your explanation. I'll take the audits and security after that.
All right. I'll make it quick since that's
Yeah,
not the question.
yeah. The question
Yeah.
is essentially just like how are you like taking the safety of users seriously? So
Well, number one is because we don't use oracles. So, by definition, oracle manipulation attack is impossible, right? The metaphor that I usually use there is you'll never get a brain tumor if you don't have a brain. So that's essentially the idea. So if you use Timeswap, you'll never fear you'll never fear that your money will be lost due to someone being able to find a way to manipulate price feed, right? That will never happen. Obviously, you still have to be afraid of market forces, which is normal in a financial product anywhere, right? But you don't have to worry about technical issues or economic attack issues anymore, which is number one. Number two is, as you can see, right, usually most DeFi projects, like when they, let's say, announce themselves, right, they could finish their protocol in, let's say, 2, 3 months, maybe, right? And essentially, right, in in crypto, everything is fast forward, right? 1 year in crypto is like 10 years in real life. Everything is like moving incredibly fast. And and as you can see in Timeswap, we're working much slower than many projects out there, right? And there could be multiple reasons for that. Number one is, honestly, most protocols who's able to finish it in 1 or 2 months, most of them are just a fork from other protocol with some minor change. I don't want to say, I don't want to say which are which, but essentially it's one reason why they're able to finish so quickly. When we build Timeswap, we build it from scratch, from nothing. For sure, we're building it from first principles of, okay, what should be, how should money market be? How should the security have to be designed, right? We had to build it from the grounds up. And when I started 2.5 years ago, I don't have that answer, right? I have to figure it out. I have to go through countless hundreds of iterations to end up with V1, which I'm not 100% happy with. And then after V1, countless iterations after that until I reach V2, which I'm very happy about. And I'm quite excited to see it being launched aggressively. And so yeah, we took time to really carefully consider different security parameters that we have to be careful about. So yeah, I think Amit can talk more about on the audit side, like what's happening there.
Yeah, I think our contract has, especially the one that's currently live on Polygon, I think has gone through probably 6 or 7 rounds of audit through pretty well-reputed audit firms like Trail of Bits, Code for Arena, OnStamp, PeckShield. So we've done an exhaustive list of audits before launching this on like the mainnet. And the V2 product, which just completed development, has had its first round of audit complete last week with PeckShield, and we are soon going to be having like more audits over the next coming weeks. So we are definitely ensuring that all security measures that we can do is taken care to ensure that it's safe to be used. And we're also like conducting gamified testnets. Essentially, the goal is that you incentivize users to like try to break the testnet itself, so that we can identify any sort of bugs or issues before we push it to mainnet. And yeah, after we launch on mainnet, we definitely going to be having like a bug bounty program for different severity. So that should happen sometime after we are live on the V2 mainnet. Yeah, I think that's like a short answer. I think we've taken too much time with that question.
No worries. I think it was a really reassuring answer, so I'm glad we covered it. It's great to hear that you guys are going about everything correctly and very properly. So, I'm curious. I know you. Well, if you're interested, you're welcome to do a screen share and showcase anything you'd like. Maybe if you want to do a demonstration of how Timeswap works, you're more than welcome to. Totally optional. We could just stick to voice though.
I think we can stick to maybe voice. I think I'm on phone, so it's difficult to do the screen share. Harshita, Rickson, how about you guys?
Trying to share the screen, but by the time if we have any questions, we can take it up. I'm just trying to project my screen. So we would like to just share a small video in terms of how TimeSwap can be visualized as Uniswap for lending and borrowing. So it's a very small video. So yeah, meanwhile
Perfect,
we can take
perfect.
up some questions.
If you are trying to include audio in the video, when you share your screen, make sure you click share application and not screen, because if you share application, it'll include the audio.
All right, let me check. Okay.
And then yeah, if anyone has any questions for TimeSwap, make sure to drop them in the chat. I feel like we've been doing a really good job covering everything. Like the TimeSwap team is giving really elaborate explanations on everything. So this has been wonderful so far. Thank you.
Yeah, I think it's also great to be able to share these things in detail. Many times we have to like skip through the, let's say, 40,000 feet view rather than getting it real. So it's nice to like have get down in the weeds of the details and explain how the whole thing works. It's like a nerd snipe for us.
Yeah, and what just to add to what you're saying there, like what I really like about this is it's okay to get overly technical. A lot of people that show up to these AMAs are here to ask like technical things and get the technical answers. So, yeah. Anyways, I can see your screen now. So if everyone wants to tune into the screen share.
Swap and how it's considered a new.
Right, screen share is live. Everybody tune in.
Hey time travelers, welcome to the time capsule. In this video, we go over what is
Is the audio also clear?
Yeah, we can hear it just fine. That's
Oh,
great.
perfect, perfect. All right, I'll just start.
Right? I think I read it the testnet view, but you can show the string first, Harshita.
Hey
Go
time
ahead.
travelers, welcome to the time capsule. In this video, we go over what is Timeswap and how it's considered a new DeFi primitive, unlocking DeFi 2.0. While DeFi has witnessed plenty of innovations like Aave, Balancer, Compound, and Curve Finance, what was conspicuously absent was a fully permissionless and oracle-less lending and borrowing platform. Timeswap, though a lending and borrowing protocol, is inspired from Uniswap and uses a similar architecture for swapping tokens but through time. So it's like Uniswap, but for lending and borrowing. If you're lending, you're exchanging tokens to the future. Similarly, borrowing is swapping the tokens from future to present. This novel design makes Timeswap a self-sufficient protocol that doesn't require any oracles to determine the prices. Essentially, the users and AMM are the oracles here. So, what does an APR and CDP mean for a lender and borrower, and how real-time price discovery happens? For the lender, APR means expected yearly yields they will receive. For the borrower, it is yearly interest to be paid. The CDP for the lender is collateral coverage per unit of asset lent. For the borrower, CDP means collateral locked per unit of asset borrowed. This is also where external market arbitrage comes in. If lending rates and CDP values are not as per the market expectations, there would be arbitrage opportunities for both lenders and borrowers. You can lend and borrow balancing your risk and APR on Timeswap, the first in DeFi. Similar to how Uniswap enables communities to create a means to exchange value, Timeswap enables communities to capture time value on their asset in a completely permissionless and truly decentralized manner. So that's pretty much it.
Awesome.
All right. So, yep. Hopefully, this video is able to give you more visualizations in terms of infographics, how you can compare Timeswap as Uniswap for lending and borrowing.
Yeah, I think that was great. This has been amazing so far. Um, I know Rickson said something about testnet, but another question I had was how do you envision TimeSwap, TimeSwap's position within the future of Web3?
Should I take this?
I'll give a quick answer to mine.
Okay.
TimeSwap does one thing really, really well, and it only does that one thing. Everything else is shit. It's really good at being able to discover time value and risk value of any pair of tokens for a particular discrete time or a particular maturity, and that's it. So we believe TimeSwap will become like the fundamental primitive for anyone who wants to build any interesting protocol that requires time value. Whether you interact with TimeSwap directly or whether you're creating an interesting vault or an interesting structured product that requires some time value, right? TimeSwap is the perfect primitive to build on top of, and that's what we see in the future. We believe that most mainstream user won't be able to see TimeSwap. They'll most likely be using, let's say, a, I don't know, a famous, easy to use, financial app. But if that financial app is surprisingly using TimeSwap as it's one of its component to make it work. So essentially, that's what we believe. And for obviously for professionals, they can just use TimeSwap directly. At least that's for me. And because TimeSwap provides permissionless borrowing, right? It means that right now we for any crypto projects, right, we can do equity financing, right, through IDO or ICOs, right? Everyone's familiar with that. But if you look at traditional corporation, we have equity financing and we have debt financing, right? Two very powerful tools to gather the capital required for the business. So because TimeSwap specifically focus on debt financing, that's one thing that we're really excited to see. Wherein any project can now finally do debt financing. We call it IDFO, initial debt financing offering, wherein anyone could lock their native token as collateral to borrow USD or whatever token from their community. So yeah, at least that's my vision of TimeSwap.
That's amazing. I see the vision. I see it. Definitely very obtainable for you guys. I think what you guys are doing is incredible. Um, so yes, I've dropped a form in the chat. So if anyone just wants to submit their wallet address in the form, I'll send them a POAP. So POAP's proof of attendance protocol NFTs. It's just a little something to commemorate your attendance here today. So yeah, the form's in the chat if anyone's interested in one of those. And then We have a question coming in from Prasant. Can we expect the Uniswap V3 LP model on Timeswap?
You mean how in Uniswap there's three users, right? The buyer from one
Uh,
side, the buyer from the other side, and the
no,
LPs. Is that correct?
no,
No?
Rickson. The question is basically, I think it's more about in Uniswap V3 how you can add prices within a range, right? So I think they're asking the concentrated liquidity.
Is that correct? Is it the concentrated liquidity question?
Yeah, I believe that's what they're asking. Yes.
So yes, currently in times of V2, we designed such that the liquidity has a price range from 0 to infinity, or the interest rate and collateral factor, similar to Uniswap V2 essentially. Because in times of V2, we're really just focusing on making sure that it's designed to discover interest and collateral factor works. So yeah, that's but because of how similar Timeswap is to Uniswap, adding concentrated liquidity for the next version is a non-issue whatsoever.
Awesome. One thing we haven't talked about at all, so I'll just comment on it. I gotta say, I love the branding. Timeswap, it's so genius. You always hear people say time is money. So to have a protocol called Timeswap, I think that is like the best brand name ever.
Yeah, thank you for that. I think for us, we
So much.
also had like, I
Oh,
mean, like when we were thinking about the names, I think there were some suggestions that like people might confuse us with an exchange since we have the name swap. I think we were constantly like explaining to people like we are facilitating lending and borrowing, and if you objectively think how like, or let's say what is the lend, what is the borrow, it is essentially you're swapping through time, right? So exchange facilitates swapping in an instant. Lending, borrowing is basically swapping assets, tokens through time, and that's essentially why it's time swap. So it's something that we've tried to like meme and also like bring it into existence.
Yeah, it's honestly truly a stroke of genius. Um, Jay Rogeres is wondering, will it be possible for Timeswap to be a lending and or sorry, they're wondering if Timeswap will be paying attention to like cross-chain lending and borrowing. Like, do you have any multi-chain ambitions? I know you're currently deployed on, I believe it's just Polygon. So I don't know. I'm curious. Like, what are your thoughts on the multi-chain
Yeah,
future and
I think yeah, you're correct that we are currently only on Polygon, and our version 2 will also be going live on Polygon first, since we've been like the Polygon community has been greatly supportive, and I think finally we are seeing the greater market starting to realize that in the last few months. I think we've seen so much good stuff coming out of the ecosystem, right? So I think it's good to see that, and we are very happy to have chosen this. Having said that, we do believe that the future is going to be a multi-chain, let's say, world where like there could be many different blockchains hosting different applications. Because I think if we really have to achieve mass adoption, I think there is no way that we have enough infrastructure today with the current block space, right? So we do believe the future is going to be multi-chain, and we will be expanding to Arbitrum, Optimism, and Ethereum mainnet. Let's say sometime after going live on Polygon. So that's like our initial vision. We also are looking at if there is, I mean, obviously there are a lot of interesting uh, protocols that are coming for, let's say, omni-chain deployments where you can like lend on one, let's say, chain, borrow from some other chain. So those are also technologies that we are definitely exploring based on how the industry is, moving forward.
fantastic. I see Time Lord has a screen share up now. Um, what are we looking at, Rickson?
Rickson, I think you're on mute.
Oh, my bad. All right. Okay. Can anyone hear me now? All right. So this is essentially the demo testnet of Timeswap. It's now in Polygon testnet. Unfortunately, Borrow isn't working well yet, and there's some bugs with the calculation here, which shows wrong information. So we'll just focus on the lending. So uh, similar to Uniswap, right? You can literally choose any tokens. Initially, we're gonna show like a list of whitelisted token, but similar to Uniswap or Balancer, you could just input any address, and then it will try to search for you if there's an existing pool for that particular token you've provided. So it could literally work with any tokens, right? So that's one. You choose a maturity because
Sorry to cut you off, Rickson. I just want to encourage everyone. Tune in on the screen share. Rickson has like a live demo going right now. So, all right. Sorry.
All right.
Go ahead.
No problem. So similar, you first choose a pair of tokens. So if it's USDC Matic, it means you want to lend you want to lend either USDC or Matic using USDC or Matic as collateral. Fundamentally, that's what's happening when you're choosing a pool. So as you can see, right, similar to Uniswap, it's bidirectional. If you want to lend USDC or you want to lend Matic, it's from the same pool. Next, unlike in Aave, where in Aave, it's like a continuous interest rate design, right? But in Timeswap, it's a fixed maturity style. So it works more like a bond. It works more like an option, right? There's a fixed maturity. And because it's a fixed maturity, you should expect maybe higher APR, right? Than, let's say, a continuous savings style product. After that, you choose which token do you want to lend. So for example, I want to lend USDC. You can see here APR and CDP, that's like the marginal APR CDP. Similar to in Uniswap, right? There's the marginal spot price. But if you choose to, let's say, lend one USDC, it will now show you the actual APR and CDP. So essentially, there's a small, you should expect slippage. The larger you're lending, the larger the slippage. So that's something you have to take into account. So for example, let's say I'm gonna lend $1 here, right? It shows that I'm going to have a position wherein I'll either receive this amount of USDC or this amount of Matic. Essentially, the collateral here shows, okay, this is the maximum, minimum amount of collateral that I want that's protecting my position, right? The higher this is, the better, because it means that if ever, in the worst case scenario, the borrowers decided not to pay back the debt, you have this amount of Matic protecting you. This is the Matic that you should expect to receive. So the idea here is, you deposit $1 here, you either receive this amount of USDC or this amount of Matic after maturity, which is in this case, it's just a few hours later. Yes. And you can see, right, if I put $10 from 7%, it's becomes 7.6. If it's 100, 6.97. So the larger your lending, slippage happens as well. So yeah, that's essentially how lending works. In borrowing, let's say the calculation here is wrong, so I'm not gonna show the number. But essentially, if let's say you borrow $100 here, right? It's gonna show that you have a debt of 100 plus some amount. So essentially, the interest rate. Plus, you have some amount of Matic collateral that you have to lock right now. And here's the thing, unlike in other compound, wherein there's liquidation, right? Wherein you have to worry about whether you have to worry about the volatility of the token. You have to worry that, okay, I want to add more, you want to manage your health factor continuously so that you don't get liquidated. In Timeswap V2, there's no native liquidation. You'll never get liquidated. So for borrowing, it's pretty simple. It's either you pay back your debt before maturity, withdraw the collateral, or you choose not to pay back your debt and your collateral gets distributed to the lenders. So as you can see, right, it's a very advantage. You don't have to worry about volatility. You only have to worry about what the price might be near maturity. You just have to decide whether you want to pay back your debt or not. So as you can see, the advantage for the borrower is much higher. There are risks for the lender, but because of the market dynamics wherein the price gets discovered, right? Gets discovered, eventually a market APR and CDP will be discovered based on the interaction between lenders and borrowers. Oh, as you can see here, right? You could also change your APR CDP. You could choose something like this or something like this. So you could also choose as well. So yeah, I think that's a good overview here.
Yeah, that was incredible. Thank you, Rexon.
I highly I highly recommend checking out the Timeswap V1. We have very similar UI as V2. It's less capital efficient, but it works. So try it out.
Sweet, sweet. And this is all recorded on YouTube if anyone wants to watch that again. And I know you guys also have a YouTube channel as well, so I'll make sure to link that. And with that said, we are starting to run up on time, so I'm curious, like, what is the best way for people to get involved with Timeswap or find out more info about Timeswap as well as you guys? What's the best way for everyone to get involved?
Amit,
I think,
Harshita?
yeah, I'll take that. So there are different ways. I think we are chatting on Discord. So Discord is obviously the most vibrant part of the Times Up community. So I think there are various ways to get involved. So obviously, our community team continuously conducts events within the Discord with respect to education. Let's say understanding of how Timestamp works. Obviously, there are interesting weekly events, fun and educational stuff. So I would definitely encourage you to get involved. It's a pretty fun bunch of people. There are a lot of memeing. They have fun and like learn together. And then obviously there are core community contributors also, which we call like time guardians, because they are essentially like an extension to the Timeswap team. So there are about 30 of them today, 30, 35. So we are constantly on the lookout for new time guardians. These are people who are essentially just an extension to us, and they have like been with us since like May, June 2021. So it's a very strong, close knit team with whom we work closely. They get access to all our early products and services. They help us test it out. So definitely encourage, if anybody wants to work closely with us, try to actively participate in the community, and then you can get onboarded as a time guardian. Other than that, we are also obviously always looking for like interesting folks to join the team. So we have like currently we're looking for somebody who's has deep understanding of DeFi and is a content writer who can like obviously like the concept of Times Up is like something new, and we need to like explain this in simple terms, and we are looking for DeFi specialists who can like convert all of this complex math into simple explanations that our users can understand. So if you are a DeFi content writer, creator, feel free to reach out to us. And there's always we are always looking for like super smart smart contract developers. So if you're one of them, feel free to hit us up. So I think these are few ways in which you can get involved. And obviously there are also bounties and other tasks that goes live on our community Discord on a weekly basis. So there are different channels. If you go there, you will see there are tasks that are assigned by various platforms. So definitely check that out also. So there is quite a lot of ways in which you can get involved. The first thing, like I said, is just hop onto Discord, say hi, and the rest will be taken care by the team.
Fantastic. And I've got all the links there in the chat for everyone to follow. So, make sure check out the protocol, join the Discord, follow on Twitter, and subscribe to the YouTube channel. And yeah, that's awesome. I think it's amazing. There's so many ways for different types of people to get involved. That's awesome. I'm really excited about Timeswap. So yeah, thank you so much for joining us today. I'm really grateful to have all of you here. Really grateful to the community. You guys have been such a great audience today. I love all the emojis that we've been getting. It's great. So lots of good vibes today. And I hope everyone has a amazing weekend. Thanks again.
Yeah, thank you so much, Zonsi, for hosting this. Thank you to the wider Polygon community and inviting us. I think it's been, I mean, we've always had great like fun working with the Polygon team. So I think it's now nice to like speak to the Discord community as well. Like as a token of appreciation, I think we'll also be providing some NFTs to like folks here. So Zansi, if you can also share the folks who are attending the addresses for the pop, we can also do a second NFT drop from our side. Also, we can give it to them. Other than that, we are also hosting like a small private beta access for the V2 testnet on Twitter. So after this call, in the next like half an hour or 1 hour, we'll be sending out a tweet from our official account. So any of you who participated, just reply to that tweet, like explaining like what you found interesting maybe in this AMA or something new that you learned or what you love about Timeswap, and you're going to select 20 random folks who will be getting access to the private V2 testnet for testing and working closely with us. So yeah, don't miss out on that. And thank you so much, and have a great, lovely year end to all of you. Thank you so much.
Thank you so much,
Awesome.
guys.
Yeah, thank you.
Thank you.
I hope we get to do this again sometime.
Yeah, like I always tell my the Times of community, have a happy time traveling.
Yes.
Awesome. Happy time traveling, everybody.
Yeah. Thank you
All
so much,
right.
guys. Bye bye.
All right. Bye
Bye.
now.
Bye bye.